Palantir stock price is soaring in 2024 and especially in the last month and a half or so. It's now up 252% year to date in 2024. So what's driving this growth? Why is Palantir stock up so much and what's going on with Palantir stock? Those are some of the questions I'm going to address in this video, looking at the company's most recent quarter's results as explained by the company's management team. We're going to get an inside look at the company's revenue growth, order value, commercial customer count. Those are the critical factors that's driving this company's expansion, both in terms of revenue, profits, and cash flow, but also in terms of stock price. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Ryan Taylor from Palantir's management team highlighted that revenue grew 30% year over year in the third quarter, driven by an intensifying AI revolution that the US is rapidly driving. The commercial business momentum continued with 54% year over year growth. And this is the part of the business for Palantir that I've been most optimistic about. I've been talking about this for a couple of years now. We all knew how strong Palantir was with governments because they're the best in class in what they offer, and governments have almost unlimited budgets when they're going out purchasing and securing contracts, especially for strategically important categories like the military. And so Palantir has had great success in that category. Where they were not growing as quickly was in enterprises or with businesses because they're so expensive. There's relatively few businesses that can afford their services. But that's been changing. Palantir, with its new strategy of going into a business, the bootcamp strategy, has turned into a re-acceleration of that segment of the business. And that's truly what's been exciting for Palantir stock investors. Company saying, with the commoditization of cognition and the rapid advancement of AI models, almost all of the investment in the AI space has been focused on supplying and improving these large language models, those like ChatGPT. But what will differentiate the AI haves from the have-nots is the ability to leverage these models in production by capitalizing upon the rich context within the enterprise. And so, to put this more simply, the differentiation is going to be utilizing a company's proprietary data along with these large language models to get the full use out of these large language models. That's what's going to drive the highest value from these large language models. Sure, these large language models are helpful in a lot of categories, especially for college students, which is an area I'm especially close to since I'm a professor at a university. I've seen how these large language models have revolutionized how students study. It's almost annihilated the education technology industry. One of the companies, in fact, one of the companies that was rated as my top stock to sell this year, the top stock to avoid, was an education technology company called Chegg, which has been absolutely disrupted by these large language models. But outside of that space, companies that have a rich data set, proprietary data, companies like Walmart and Home Depot, etc., that can utilize that data to improve the business really have an advantage here, and that advantage separates them from the other mid-size or smaller size businesses in their categories or subcategories that may not be able to afford this kind of service from Palantir, but also that they might not have the rich stores of data and data analysis departments the way that those larger businesses have. And so that's really what's going to separate this haves from have-nots, as Palantir is talking about here. And of course, if you have that rich data storage and you can hire a company like Palantir to make the most out of those, you can really separate yourself from those smaller businesses in your industry. And that's what's been happening. That's why Palantir is finding great success with their services. So one use case they highlight is how they helped automate key underwriting workflows for an insurance company, reducing the typical underwriting response time from over 2 weeks to 3 hours. Now, that's a huge improvement from over 2 weeks to 3 hours. And those kinds of opportunities are rare. And that's probably why they highlighted that opportunity here in their conference call. But even if you can take something that usually took 6 hours to complete and you bring it down to 3 hours, you've improved your business process function significantly. This is something I focus on intensely. Otherwise, I wouldn't be able to produce the kind of output that I produce on a weekly, monthly, annual basis without paying close attention to my processes, getting my processes, eliminating waste from my process, making sure that my work time is spent on adding value for my viewers. And I can see several areas where if I had the services of a company like Palantir, how I could streamline my workflow. Now, my business is too small yet to afford a service like Palantir, but I can see several areas, at least half a dozen to a dozen opportunities where if I could utilize this type of AI service, I could streamline my operations, improve performance, improve quality, reduce waste, etc. So I can see this happening for larger businesses. I can see them having so many opportunities here to utilize Palantir and remove waste, improve productivity for their employees. And that's why, again, I'll reiterate that Palantir's biggest opportunity is with the enterprise. The government business will be the core, to be sure, but enterprise, U.S. enterprise, especially U.S. enterprise, because of their position, how it aligns with Palantir's values, is ripe for disruption, and Palantir is in an excellent position to benefit from that trend. So last quarter, they closed many deals, and the evolving deal cycle as they take customers from prototype to production is having a phenomenal effect on the growth of their U.S. commercial business. This is the pilot program that I highlighted earlier. They've been going into businesses, offering them sort of like a free trial type thing, where they go in and they demonstrate their capabilities. And then after they demonstrate, after they prove their capabilities, the value they add to the business, they then secure a contract from the business, which feels like it's a no-brainer at that point once they see, oh, Palantir can help us reduce costs by 20 million while improving quality to our customers. That's a no-brainer, and they just go ahead and sign a contract after they see evidence that this is what Palantir can do. And so in the latest quarter, U.S. commercial, they closed nearly $300 million worth of total contract value. Customer count grew by 77% year over year, and that was an acceleration compared to 37% growth in the same quarter last year. And one example they give several examples here: bottled water manufacturer, a pharmaceutical company. They all signed 7-figure contract deals less than 2 months after the initial boot camps. So that's a very short time span from when Palantir went in and when a contract came out. Now, this is not always going to be the case. I wouldn't be surprised if the average time to closing from initial boot camp to contract signing is closer to 6 months. But there's going to be these instances where there's so much low-hanging fruit here in U.S. enterprise where Palantir can go in and within a couple of weeks or within a month, they can show a business something that's so obvious that they can help with, that the business is going to be like, okay, this is a no-brainer. Let's just go ahead and sign this and get this going as quickly as possible, because we see this as something that's going to improve our business right away. We don't want to wait any longer. Let's go ahead and implement this. This is a no-brainer. So this is what's driving Palantir. And you can see here Palantir stock price is up 252% year to date, driven by fundamental improvements of the business. Now you can say it's getting a little bit ahead of itself, and that's what I've been arguing, that it's an excellent business, a great business, but the valuation has gotten very expensive now, trading at a forward price to earnings of 128. I was talking about the valuation being expensive when the forward price to earnings was closer to 75, 80, 90. Now at 128, the valuation is stretched, but that doesn't take away from the company's phenomenal performance and its position in this industry that's got a strong tailwind behind. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.